Um, Good afternoon, distinguished ladies and gentlemen, and let me welcome all of you to the 130th communique briefing of the Monetary Policy Committee meeting that held today, Thursday, the 28th of May, 2020. The Monetary Policy Committee met on 28th of May 2020 in an environment of severe macroeconomic shock caused by the fatal spread of the novel COVID-19 pandemic, which first started as a health crisis in December 2019 in China and quickly morphed into a global economic crisis in the ensuing months. The pandemic-induced economic shock is mainly characterized by disruptions to the global supply chain on account of the mitigating measures including lockdowns, travel bans, and quarantines put in place by various governments to contain the spread of the disease. The effects on the global economy have been unprecedented and indeed severe. These include significant stock market crashes, exchange rate volatilities, rising corporate and public debt, rising levels of unemployment, tightening financial conditions, capital flow reversals, and negative shocks to commodity prices, to mention a few. Under this period of economic crisis, the committee assessed the developments in the global and domestic economic environments in the first 5 months of 2020 and the outlook for the rest of the year. 10 members of the committee were in attendance. The global economic developments. The committee reviewed developments in the global economy, noting the swift and widespread monetary and fiscal stimulus responses to mitigate the economic crisis and avoid economic recession. They observed that since the duration of the pandemic is unknown, forecasts for global growth projection for 2020 differs amongst institutions and central banks. While the International Monetary Fund output growth forecast for 2020 was downgraded to contract by 3% in 2020, compared with an initial growth projection of 3.3%, the forecast by the Organization of Economic Cooperation and Development showed a moderation in global output from 2.9% in 2019 to 2.4% in 2020 and 3.3% in 2021. Most central banks in emerging and developing economies have mixed forecasts for their economies, reflecting the intensity of the demand and supply shocks, as well as the effectiveness of the mitigating measures and stimulus by their monetary and fiscal authorities. The MPC also noted that inflation in most advanced economies remained largely below their 2% long-run targets. This was partly due to suppressed aggregate demand, occasioned by lockdown with restrictions on movements and economic activities, with resulting low expectations of future income, forced spending directed only to essential goods and services. The committee, however, noted that although recent monetary decisions in most advanced economies had been accommodative, portfolio flow reversals from emerging and developing economies had continued, indicating general rebalancing of portfolios towards cash and gold as safe assets by investors. This development has resulted in renewed pressure on exchange rates of some emerging and developing economies, with a likely pass-through to their domestic prices. In addition, a likely medium-term impact of these synchronized liquidity injections and other forms of monetary accommodations is the compounding of the already huge global corporate and public debt portfolios, which may result in a spike in global debt post-COVID 2019. Domestic economic developments. Available output data from the National Bureau of Statistics (NBS) showed that real gross domestic product grew by 1.87% during the first quarter of 2020 compared with 2.5 and 2.10% in the preceding and corresponding quarters of 2019 respectively. This was driven largely by 5.06% growth in the oil sector and 1.55% in the non-oil sector. The economy, however, expanded by 2.27% in 2019, the most since 2015, and compared to 1.91% in 2018. The positive but lower growth observed during the first quarter of 2020 is expected to dip slightly on the back of the combined monetary and fiscal stimulus by the monetary and fiscal authorities to ensure that growth at this time is supported to avoid a recession. The Manufacturing and Non-Manufacturing Purchasing Managers Index declined significantly to 42.4 and 25.3 index points respectively in May 2020, compared with 51.1 and 49.2 index points in March 2020. The decline in manufacturing PMI was significant following 36 consecutive months of expansion, while the non-manufacturing PMI contracted for the second quarter consecutive month. The contraction in the Manufacturing and Non-Manufacturing Purchasing Managers Index was attributed to slower growth in production, new orders, employment level, raw materials and input prices. The Employment Level Index for the manufacturing and non-manufacturing PMIs also contracted further to 25.5 and 32.0 index points respectively in May 2020, compared with 47.1 and 47.3 index points in March 2020. Generally, the purchasing managers' activities in May 2020 were largely affected by the lockdowns of the global economy to curtail the spread of COVID-19 pandemic. In the light of the above developments, the Monetary Policy Committee commended the bank's efforts on the recent measures put in place to mitigate the economic impacts of the twin shocks on the Nigerian economy. The committee expressed support for the sustenance of the broad-based stimulus and liquidity facilities being provided to curb the adverse effects of the shocks. The committee also noted with concern the persistent uptick in inflation for the 8th consecutive month, as headline inflation year-on-year rose to 12.34% in April 2020 from 12.26% in March 2020. The uptick largely reflected the increase in both the food and core components, which rose to 15.03 and 9.98% in April 2020 from 14.98 and 9.73% in March 2020, respectively. The MPC noted that the recent increase in inflationary pressure was largely due to a combination of factors, including disruptions in supply chain owing to restrictions on interstate travels, reduced domestic supply of foreign exchange, continued impact of deteriorating domestic infrastructure, and spillover effects of the pandemic on global supplies, amongst others. Against this background, the committee emphasized the need to sustain measures already put in place to maintain price stability. It noted that as the supply of goods and services increased following the gradual easing of the lockdown, and return of economic activities, particularly in the informal sectors by which the daily paid workers access daily income, there will be increase in aggregate supply to the economy. On the monetary aggregates, committee noted the marginal growth in broad money M3 to 2.66% in April 2020 from 4.42% in March 2020, largely due to increases in net domestic and foreign assets. The growth in M3 was, however, significantly below the indicative benchmark of 13.09% for 2020. Aggregate net credit also grew significantly by 8.07% in April 2020, compared with 4.90% in March 2020, although this remained below the indicative benchmarks of 16.85% for the year. The committee therefore observed that there was a relative scope for increased money supply to fund economic activities and boost output recovery. In the review period, money market rates remained relatively stable, reflecting the prevailing high liquidity conditions in the banking system. Accordingly, weighted average interbank call and open buyback OBB rates decreased to 7.33 and 5.52% in April from 10.29 and 11.78% in March 2020, respectively. The committee observed that though the equities market was largely bearish in the first quarter of 2020, moderate improvements continued to be recorded since the beginning of the second quarter. Consequently, the all-share index and market capitalization increased by 18.33% apiece between end of March 2020 and May 22, 2020. This bullish trend reflected improved investor sentiments in response to the mitigating measures introduced at the onset of the pandemic by the monetary and fiscal authorities and positive outlook on the global oil market. The MPC expressed confidence that the current monetary and fiscal policy measures would further strengthen investor confidence. The non-performing loans ratio decreased to 6.58% as at the end of April 2020, compared with 10.95% in the corresponding period of 2019, due largely to recoveries, write-offs, and disposals. The development was adjudged by the committee as a sign of reasonable stability in the banking system and urged the bank to maintain its toolkit of prudential and regulatory measures to ensure that NPLs stay below the prudential benchmark of 5%. The outlook. The overall medium-term outlook for the global economy remains broadly uncertain as the COVID-19 pandemic and associated containment measures continue to disrupt normal economic activities across the globe. The global economy remains largely confronted with several headwinds, some of which include weak aggregate demand due to declining consumer and investor confidence, disruption in global supply chains, shock to oil and other commodity prices, continued lull in global financial markets, adverse shocks to global capital flows, as well as rising corporate debt in the advanced economies and public debt in some emerging markets and developing economies. Available data on key macroeconomic variables in the domestic economy indicate that the economy achieved a positive output growth during the first quarter of 2020. The committee noted even if the lag effects of COVID-19 results in a low negative output growth in the second quarter of 2020, it could quickly be reversed to avoid a recession for Nigeria by the third quarter of 2020 based on the far-reaching measures taken by the monetary and fiscal authorities to mitigate the combined effects of the COVID-19 pandemic and oil price shock. Projections by both the IMF and federal government indicate that the economy would contract in 2020 by 3.4%. Given more recent developments, however, CBN Star projections indicate a somewhat less pessimistic range of contractions. This forecast is underlined by the measures to arrest rapid spread of COVID-19, improvement in crude oil prices, which stood at about $34.8 per barrel as at the 28th of May 2020. The moderate recovery in crude oil prices reduced the pressure on external reserves and government revenue. Headwinds to growth, however, remain the legacy issues of the persistent infrastructural and security challenges. The committee's consideration. Central to committee's considerations were the impact of COVID-19 pandemic, the oil price shock, and the likely short to medium-term consequences on the Nigerian economy. In particular, committee acknowledged the gradual improvement in macroeconomic variables, particularly the improvement in the equities market, the containment measures of the COVID-19 induced health crisis, as well as the impact of the increase in crude oil on the external reserves. Committee noted the stability in the banking system, shown by the increase in total assets by 18.8% and total deposits by 25.52% year on year. The performance of the loan-to-deposit ratio policy, which was introduced in July 2019, showed that total credits increased by 3.1 trillion or 20.45%, with manufacturing, retail, and consumer loans, general commerce, and agriculture as major beneficiaries. The committee recognized that under the 100 billion healthcare sector intervention fund, the bank has approved and disbursed 10.15 billion for some projects for the establishment of advanced diagnostic and health centers and the expansion of some pharmaceutical plants for essential drugs and intravenous fluids. As part of the 1 trillion naira intervention targeted at the agri and manufacturing firms, the bank has further disbursed 93.22 billion naira under the Rural Sector Support Fund to boost local manufacturing and production across critical sectors. This consists of over 44 greenfield and brownfield projects. The bank has also approved 10.9 billion to 14,331 beneficiaries under the 50 billion naira targeted credit facility for households and small and medium enterprises, out of which 4.1 billion naira has been disbursed to 5,868 successful beneficiaries. The committee directed management to reach out to the banks to encourage them to offer and disburse those funds to those priority sectors of the economy so as to stimulate aggregate demand and create more jobs in the country. The MPC have praised the federal government's resolve to maintain the core its spending plans for 2020, as this remained vital for the attainment of the much needed economic recovery. It also applauded the government's efforts at revising the oil price benchmark downwards to reflect prevailing conditions. It reiterated the urgent need for government to improve tax collections through a gradual but purposeful diversification of the economy's revenue base. The committee also urged government to remain focused on the implementation of the revised 2020 to 2022 medium-term expenditure framework as the basis for sustainable fiscal policy. The MPC emphasized the need for government to work towards a gradual reopening of the economy in line with recommendations of the Presidential Task Force and advice from the medical experts, insisting that efforts must be directed at saving not only lives but also livelihoods. This is to enable the resumption of economic activities necessary to stimulate growth, hasten the pace of recovery, and restore livelihoods, particularly the vulnerable in our society. On prices, the MPC expressed concern about the heightened inflationary pressure attributed to a combination of monetary and structural factors. While price stability remains the bank's primary mandate, the committee expressed the need for a balanced approach in supporting growth in the face of rising domestic prices. With respect to output, committee urged the federal government to continue exploring options of partnership with the private sector to fund investment in infrastructure. This would aid employment generation, support production, and boost output growth. Committee also reiterated the potentials for both direct foreign and domestic investments to support growth in key sectors of our economy, including Nigeria auto manufacturing, aviation and rail industries. Committee expects that on the backdrop of the various stimulus packages, increased credit at lower interest rates, the impact of the COVID-19 pandemic will be relatively less severe than had earlier been expected, and the reversal in growth deceleration would become more optimistic. Committee commended the bank's role in effective oversight of banking system, evidenced by the relative stability in key financial soundness indicators and systemic resilience of the banking sector in the face of severe external shocks. On the choice before the committee, the MPC observed the weakening of the global macroeconomic environment due to the adverse impacts of COVID-19 and drop in crude prices, which has resulted in negative output in most economies. The MPC also feels that the logical expectation is that to ensure that the global economy reverses from the recession timely, what policy makers must do is to take actions that will necessarily stimulate growth and recovery. For Nigeria, although Q1 2020 gross domestic product turned out pleasantly at 1.87% and rates of inflation somewhat moderated, Nigeria may escape a recession if concerted efforts are sustained to stimulate output. Accordingly, on balance on whether to hold, loosen, or tighten, the Monetary Policy Committee was of the view that tightening of policy stance is for now inappropriate. This is because tightening will result in further contraction of aggregate demand as disposable income diminishes, leading to decline in output, which is necessary to sustain the supply chain for growth recovery. Tightening will also increase cost of credit and reduce investment and impact negatively on output growth. As regards the option of holding previous policy stance, the Monetary Policy Committee felt that a hold may indicate that the monetary authorities are insensitive to prevailing weak economic conditions. There is therefore the need to signal a direction towards immediate recovery. Monetary Policy Committee also feels that a hold decision may slow down the trajectory of the weakened economy compared with a loosening stance, thereby slackening output growth. On loosening, whereas the Monetary Policy Committee is concerned that excess liquidity engendered by loosening may overshoot the economy's absorptive capacity and accelerate inflationary pressures, it nevertheless feels that, given the slow rate of acceleration of inflation, the accommodative stance will stimulate aggregate demand and supply in the short term. This is because an accommodative stance, through a lowering of policy rate, will stimulate credit expansion to critically important sectors that will also stimulate employment and revive economic activity for quick growth recovery. The MPC noted that if all stimulus packages already announced by the bank, such as concessionary rates, loan restructuring, and targeted loans to agri manufacturing and health sector are well utilized, this will produce the desired impetus needed to boost economic recovery in Nigeria. Committee's decision. After reviewing the three options, the MPC noted that the imperative for monetary policy at the May 2020 meeting was to strike a balance between supporting the recovery of output growth while maintaining stable price development across inflation, the exchange rate, and market interest rates. To this end, committee noted that the cash reserve ratio requirement was recently adjusted upwards as a means of tightening the stance of policy. In its response to COVID-19 pandemic, however, the bank reduced interest rates associated with all CBN interventions from 9 to 5%. Increasing MPR at this stage will thus be counterintuitive and will result in upward pressure on retail market rates. Committee maintained that although a sharp decline in output growth is expected in the second quarter of 2020 and maybe the third quarter, if the current stimulus initiatives are properly implemented, the economy will reverse to positive growth by the fourth quarter. Hence, the optimism on the part of the Monetary Policy Committee that the country may not slide into recession. In view of the foregoing, the committee decided by a unanimous vote to reduce monetary policy rate and to hold all other policy parameters constant. 7 members voted for a reduction of the monetary policy rate by 100 basis points, 2 members by 150 basis points, and 1 member by 200 basis points. In summary, the MPC voted to 1. Reduce MPR to 12.5%, 2. Retain the asymmetric corridor of plus 200 and minus 500 basis points around the MPR. 3. Retain CRR at 27.5%, and 4. Retain the liquidity ratio at 30%. Thank you so much for listening.
Thank you, Governor. And that was the communique of the 273rd meeting of the CBN MPC. Mr. Governor, normally we don't take questions on this COVID version of the communique presentation, but a couple of our people have sent in some questions. May I crave the Governor's indulgence to read them out so you can take them? Thank you.
Thank you. You can read, go ahead.
Okay, thank you, sir. The first set of questions come from Nancy Ilonaji of Moneyline on AIT. He says, how do you assess the fear of global recession and how this will impact the Nigerian economy? That's our first question. The second one says, we have read in some reports that Nigeria's GDP will contract by almost 8%. How true is this? And what is CBN doing to ameliorate this impact on Nigerians? Her third question goes, how much of oil drop will be digestible and indigestible to deal with this pandemic shock that will impact FX? I hope that is clear. The other question comes from Tope Alake from Bloomberg. He says, we would like to know how CBN is meeting FX demand of manufacturers. They are complaining of dollar scarcity and how they can raise letters of credit to import. The next set of questions comes from Nduka of the Nation, Nduka Chejina of the Nation. He says, there have been calls that the government should reopen the economy. What is the view of the CBN, given that the number of infections are still rising in Nigeria? I'm just reading as he said. And when will the supply of forex to BDCs likely resume? Obi Nachima of This Day has these questions. How effective are the stimulus that the monetary authority has put in place? Second question, with the COVID-19, it is clear that Nigeria must now refocus on diversification. What else would the CBN do to achieve this goal? And then the very last question from Obina says, how strong are the banks now? How strong are the banks now following huge exposure to the oil and gas industry, which has lost significant revenue and massive withdrawals by customers during this pandemic? Are we expecting huge NPLs because of the drop in the price of crude oil? Sorry, I was reading very fast. I hope you took the notes correctly.
All right, thank you very much. The world is faced with unfortunate drop in crude prices and the COVID-19 pandemic that has resulted in almost 4 or 5 million infections all over the world. And I think infections running close to, deaths, right? Rising close to almost about 400,000. This is a very unfortunate situation that has led, whether we like it or not, to health crisis of unprecedented proportion, and indeed, after it, or even commingling with it at this time, economic crisis never seen before in global economic history. If you all notice, all economies are today affected. Is it the US? Is it the Euro? Developed economies, developing economies, frontier markets are all affected by this. To the extent that even in some economies, the US first quarter growth was negative of almost 4.9%. The EU also first quarter growth was a negative almost about 3.9%. China suffered massive drop from double-digit growth to very low single-digit growth. All other major economies that the IMF at the meeting in October had predicted will help in accelerating and ensuring that growth is achieved during 2020, all have suffered unprecedented declines in output growth. I would say this, luckily, Nigeria, and pleasantly, this was a pleasant surprise, that Nigeria's first quarter growth came down from 2.5% during the fourth quarter to 1.87% during the first quarter of 2020. Perhaps understandable by virtue of the fact that we began to really lock down our economy in the month of March, because we were already seeing some impressive growth trajectory, upward growth trajectory in the months of January and February, following the recovery that we had seen in 2019. So we saw what I could call a somewhat pleasant GDP of 1.87%. No doubt, because Nigerian economy, just like all the other global economies, have been shut down during the months of, in this case, April, May, substantially, and maybe to some extent also in June, we are almost certain that growth in the second quarter will be negative. But talking about how this will impact the Nigerian economy, let's all understand that the Nigerian economy is part of the global economy, so naturally we are impacted. But what is important is that to what extent are we able to manage this impact to see to it that we are, as quickly as possible, join others in getting out of the difficult situation. And that is what we all need to work together towards. And that's why we say that perhaps as we begin to see the easing of the lockdown and business begins to come back alive again, then we all need to move very, very aggressively and fast to see that economic activity is pushed to an extent where, if we are lucky, third quarter growth may come out positive and therefore return Nigeria back to a situation where we can say that we are not into a recession. There have been predictions, and understandably so, that just like the global economy will be in recession, that Nigeria will be in recession. But we think that as we ease the lockdown and we begin to take actions as quickly as possible to ensure that we move very fast out of the situation, get businesses back again, get the health sector back again, get our farmers to get back to the farm and go and conduct their farming and planting activities, we will be able to escape a recession. The second question says that we have read in some reports that Nigerian GDP will contract by almost 8%. How true, and what is CBN doing to ameliorate this impact on the Nigerian economy? Like I said earlier, yes, there are predictions that just like the global economy will slide into recession, there are predictions, because I call them predictions because they are forecasts, that Nigeria will also slide into a recession. But that if we, as quickly as possible, ease the lockdown, get the businesses back as quickly as possible, those who have suffered total destruction of their business, we make funds available to them in the health sector, in the small and medium enterprises, in the manufacturing sector, in the agri sector, make funds available to them as quickly as possible and at concessionary rates, and also give those even who have existing loans in the banks an opportunity to restructure their loans and push forward their repayments, then it should be easy for us to get businesses back alive so as to continue to accentuate increase production and so save our country from recession. So, like you all know, we put on the market 50 billion naira household and SME funds, out of which almost about 5 billion has so far been disbursed to almost 7,000 people. We also have a 100 billion health and pharmaceutical sector facility, out of which almost more than 10 billion has so far been disbursed, and we're hoping that more and more people will join. We are also hoping that the 1 trillion naira agri and manufacturing facility that we put in place, intervention we put in place, that they will be drawn as quickly as possible. People can access them so that as the lockdown is eased, we can get back to business again. Then I believe we should be able to get out of it as quickly as possible. Tope Alake from Bloomberg, that he would like to know how CBN is meeting FX demand for manufacturers. You all know that as a result of the lockdown, when you say the global economy, globally there was economic lockdown. It also meant that all manufacturing plants is like a machine. The global machine was shut down. What did that mean? That even people who were manufacturing were not manufacturing the raw materials you would say you need. Or whatever input you thought you needed, that chain has been blocked because they all locked down. So, but notwithstanding this, the central bank has been in the market supporting manufacturers, particularly those who require priority items on matured letters of credit and bills to make payment for their matured obligation. We've heard cases of people talking about opening of new LCs and the rest of them, whereas we do not want to engage with them an argument as to whether or not this is feasible. But our view is that at the time of lockdown, we wonder what fresh LCs are being opened at this time. And that is why sometimes we question the veracity in some of the information that people come to us to say that they are opening new LCs. But if you are talking about matured LC or maturing LCs or maturing FX obligations, the central bank has made itself available to fund these obligations. So there is no truth in anybody saying that there's FX scarcity to meet their maturing obligations, or even some of the so-called fresh LCs that people are opening, which we frown at this time, because I'm not going to pretend that I do not see, and I must say very clearly, I do not see the rationale in fresh LCs at this time when the global manufacturing chains are shut down. Okay? Now, Nduka of Nation says there have been calls that the government should reopen the economy. What is the view of the CBN given that the number of infections are still rising in Nigeria, and when will the supply of forex to BDCs resume? We do understand and appreciate that government must do what it must do, because government has a sole responsibility to fend and be attentive to the needs of its people. So as a result of this crisis, no doubt, and to avoid a situation where the infections spread very widely, government had to take a decision to lock down the economy. But we are happy that the PTF has advised government, and government has started a phased easing of this lockdown. But we are trying to say that we must be aggressive at this time, notwithstanding the fact that yes, the trend is still rising. Unfortunately, yes, the trend is rising. While we are trying to save lives, we must also save livelihoods. We must save livelihoods. One way to save livelihood is that we must confront the fact that we must reopen the economy. We must get our farmers to go back to the farms. We must get the manufacturing plants back again, and we must begin to see the fumes coming out of the rooftops of these manufacturing companies. If we don't, the unprecedented unemployment that will face us, resulting from factories and manufacturing plant shutdowns, will be so unprecedented that we would have hurt so badly livelihoods that we thought we were going to protect, because we're saving lives as a result of the lockdown. That's what we're saying. That we must be aggressive and say we must reopen the economy, but at the same time, still take into consideration the protocols from our health officials. You all recall on BDC that at the beginning of the lockdown in March, the BDCs themselves, the association, wrote to the central bank to say that because they could not guarantee observing social distancing, and because they were afraid that there will be infections as a result of the processes put in place, and more importantly, the fact that they themselves were convinced that there are no more travels because almost all nations had shut their borders, that there was the need for the central bank to halt the sale of forex to the bureau de change operators. Central bank promptly complied and stopped. So what therefore would happen? As soon as the economic lockdown is eased, to the extent where we are saying that travels have resumed, borders have now been opened for travels to happen, certainly the BDCs will resume. We note some of the activities of some nefarious activities in the market, but we just smile because we know that anybody purchasing forex in that market today will begin to wonder the motive behind purchase of forex in the BDC market today. Why? If the BDCs are meant to substantially satisfy the needs of travelers, and there are no travels as a result of travel ban, then you and I can guess who the people are that are involved in nefarious activities buying dollars because they found some naira somewhere. That's all I want to say. Obinna, how effective are the stimulus that the monetary authorities has put in place? Like I read in the course of this presentation, we have provided a couple of stimulus packages, and companies have started, households and SMEs have started to access them. We would admit that the rate of access is low at this time, and we believe it is because of the lockdown. But that as the lockdown begins to be eased, certainly more and more people will apply for these facilities, and we should be able to make these funds available so that their businesses can immediately and aggressively take off. With the COVID-19, it is clear that Nigeria must now remain focused on diversification. What else will she be able to achieve this goal? There is a saying. First, let me say that Nigeria has been talking about diversification for almost 50 years or more. That there's a need for us to move away from depending on oil and go to the agri sector, go to the manufacturing sector to grow, to support our economy. We do not have any time more potent than now to do so. There's a saying that when an animal or a bushmeat in the bush begins to run very, very dangerously and aggressively, if you are a hunter, for you to kill that bushmeat, you must also approach it you must shoot it very dangerously and aggressively. Otherwise, you will not be able to catch that bushmeat or shoot it down. What am I saying? There is no other time but now for us to follow through, pursue the implementation of our policies on diversifying the economy. There is no other time than now. There is no other time than now that has been afforded us to reset the economy of Nigeria again. And that we must all work together to ensure that we do so. As a result of this pandemic, over 40 countries have banned the export of either drugs or goods out of their country. Nigeria has been lucky that 4 years ago, President Muhammadu Buhari told us to say, agree, CBN, let's go and let us launch rice program. Today, Nigeria is almost self-sufficient in production of its rice locally. Countries where rice are being exported have banned the export of their rice out of their country. To the extent that the price of rice in those countries have risen by as high as 70 to 80%. Because they themselves are running out of supply, out of production, because their farmers are all locked down at home. So what am I saying? Even countries that produce drugs have banned the export of their drugs. Nigeria is a country with 200 million people. Nigerians are very brilliant, smart, endowed people. I think the time is now that we should not just be talking about diversifying the economy, but that we must follow through to see to it that we go deeply towards implementation of all policies that government, monetary and fiscal authorities are putting in place to diversify the base of Nigerian economy. We do not have a choice but to do this. Are we expecting huge NPLs? We are not expecting huge NPLs. We are not expecting. You have seen NPLs have come down from over 12% last year to 6.58% today. Loans are being restructured, interest concessions are being granted, and I am so optimistic that the kind of support that has been provided not only to banks but also borrowers by the central bank is a good dispensation to keep them alive, be able to continue to work, to be able to pay back their loans as events unfold. I thank you all for your understanding.
Wisdom in hunting and then monetary policy. And it goes, and I quote, if an animal runs in an aggressive manner, the only way you can gun it down is to shoot in an aggressive manner. Unquote. GIMFL 2020. That's very interesting, and that brings us to the close of the MPC communique session for May 2020. I want to appeal to all of us, both here and at home. Please keep safe, wash your hands frequently, use your mask anywhere you go. If you have a cough, report. If you see anybody who has it, report. The earlier you take care of yourself, the greater your chance of survival. God bless you all.
See you guys.
All right. Okay, thank you.